I'd like to use the Atlanta Fed scale for my weight loss. Can I get an Atlanta Fed scale? Wow, all the other scales say I've lost 5 pounds, but the Atlanta Fed one says I lost 25. That's amazing.
Oh. Okay.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situation, or needs. All participants in this podcast may have a financial interest in any or all of the products or securities mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objective, financial situations, and needs. If any private products are detailed on this website, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Welcome to episode 31 of The Money Path with Bob Iacchino and Mike Arnold, founders of Path Trading Partners. I'm your host, Stafford. Today's What and the Why segment is sponsored by MotiveWave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join Bob, Mike, and Stafford with a conversation on the markets that's casual, and it's already in progress. What the heck happened in that movie Trading Places when they traded orange juice?
We did touch on that before. We never
talked.
Did we ever talk about what that was? That's a great movie for a number of reasons. Several different reasons. First of all, the first time I saw that movie, I didn't even know the Chicago Mercantile Exchange existed. I remember when my friend said to me, "Hey, why don't you come down to the Chicago Mercantile Exchange with me?" I thought we were going to the merchandise mart. I had no idea what he was talking about. I didn't even know what it was. And I think for a lot of people, even in Chicago, which is the epicenter of futures trading, always has been, there's people that live within the 7 million people in the Chicagoland area that have no idea what goes on down there. So when I saw that movie, I just always thought it was funny because I always thought Dan Aykroyd did the single best semi-effeminate rich guy ever since Saturday Night Live. Right? He just was always the best at that. And so I thought he was hysterical in that movie. But I had no idea how they could sell first and make money. That was always the amazing part to me about that movie. It's like, I don't understand. They were selling something and they bought it back. And so in my mind, they ended up with a product. That's what I always thought. I'm like, so they bought a bunch of oranges? How did they make money? I had never had any concept of what shorting was. So that movie did not prompt me to explain it. And I'm really surprised. Little known fact, that was supposed to be pork bellies. It wasn't supposed to be frozen concentrated orange juice.
Oh, really?
Pork bellies is inherently funnier than orange juice.
I agree.
Right? I can say orange juice.
That's a true statement you said today.
Yeah, I mean, I can walk up to somebody in the middle of a crowd and just go, pork bellies. And they'll think it's funnier than if I go, orange juice.
So the way I understand it is that they came into the trading floor so they could bankrupt the Dukes. They knew already what the orange juice harvest was going to be. They were selling using leverage.
So everybody thought it was going to be a poor harvest.
Okay, a poor harvest.
Okay, and that's why if you notice in the when it all got quiet around that TV at that trading post, and the guy says the cold weather has apparently not affected the orange juice harvest,
right?
Meaning that there was going to be a larger amount of oranges than the market was thinking, because the market was thinking that the frost did affect the orange juice harvest. And the guy comes on and says it did not affect the orange juice harvest.
Aykroyd and Eddie Murphy and their characters walked onto the floor. They were selling, throwing the price up, and then when they came on and they were the Dukes came on and started buying. And remember when they said to the guy, they go, "Don't worry about the price, just keep buying." That's because they thought the report was going to say that the frost did affect the orange juice harvest. So theoretically, fewer oranges and therefore higher prices, right? Smaller supply, higher price. Greater demand, higher price. So if there's more people chasing fewer goods, the price goes up. So either one of those or a
combination of those. More people chasing the goods or fewer goods or both drives up price. So in the case of this example, a frost affecting the harvest would mean fewer goods. So it means higher prices. So the Dukes were trying to buy before that announcement came out. And when the announcement came out, saying that the frost did not affect the harvest, that meant more goods and lower prices.
And then Eddie Murphy and Dan Aykroyd changed their position.
No, they went in with no position. So this was the part that confused me when I watched the movie. All right? When you short something, you're selling it before you own it, anticipating that the price is going to go down. So, Stafford, you're a car guy. So the example I've always used when I've explained shorting to people is Stafford Hyler is driving down a country road and he sees a, 63 Stingray?
How's that? A 67 Camaro. I'll go for that.
All right, 67 Camaro, and you catch a glimpse of the headlights in the barn that you're driving by, and you're like, I know that's a 67 Camaro. Nothing else looks like a 67 Camaro.
For sure.
And as you pull over, you hear the one farmer talking to the other farmer saying, if I could sell this little Camaro, if I could get 10 grand for it, I would. You then continue your drive, and you end up at the local diner. And at that local diner, you see Mike Arnold, dressed up in a suit like Mike always wears, looking all rich like Mike always does.
I never look rich.
Okay, perfect. So you're sitting there, and Mike Arnold is talking to this pauper, Bob Iacchino, this just idiot. And he goes, I've been searching for a 67 Camaro my whole life. If I could find one, I'd pay $30,000 for it. And you turn around and you tap Mike on the shoulder and you go, sold. But I have a 67 Camaro. I'll sell it to you for $30,000. You go, I'll sell it to you for $30,000 as is. Right? Mike goes, okay, here's an envelope full of $30,000 cash. Where's my car? You go, I'll be right back. You now just sold something before you owned it. Right? Now you drive back to the barn. You take $10,000 of that $30,000 and you give it to the farmer. You take that Corvette. You deliver it to Mike Arnold. You now have made $20,000 selling something before you owned it.
So in Trading Places, how did they use this situation then to then completely bankrupt the Dukes?
Yeah, so what they do now is as the price is being driven up, Eddie Murphy and Dan Aykroyd start selling the oranges before they've bought them, right? So as they're selling the oranges, the money is going into their account. Now they need to use that money to then buy the oranges back, just like you did with the Camaro, right? You got the money first, and then you went and bought the Camaro from the farmer. Right? So Dan Aykroyd and Eddie Murphy are selling the oranges, and that money is going into their trading account. Now, when the report comes out and the prices completely collapse, they now take that money from their account and buy back the oranges that they initially sold and keeping the difference. So I think if I remember right, they were selling around 28, and then the price ended up around 7 or something like that.
No, I think it's 120 and then went down to 21.
Yeah, oftentimes in futures trading, you're trying to exit the trade on the same day so that you don't owe the money at the end of the day. What they let you do in futures is Eurodollars is always my favorite example. The Eurodollar futures pit, each contract has $1 million notional value. So if you buy one contract, you theoretically have bought $1 million of Eurodollars, which is not the currency, but that's not important.
I was going to ask you to clarify that because people nowadays think Eurodollars is, you're talking about the euro. But
all right, let's use gold instead, right? Each gold contract is 1,000 troy ounces, all right? So if you go on the exchange and you buy one contract of gold futures, right? And Mike, have you seen the price today? I haven't. It's right to be around 12 something.
Of gold? It should be selling off a bit with that price. 1345.
All right, so 1345 times 1,000 is $1.345 million. Well, you don't have to put up 1.345 million to buy one gold contract. You have to put up about 5,000.
Okay.
Right?
Yeah.
And then when you make $1, you get back $5,001 or whatever it is, right? So, but you can't leave those positions on indefinitely. So there's a point in time where what's called a margin call comes out, and they say, look, you have this many positions, and you don't have enough money in your account to cover it, so we need the money now, today.
Hey, about how many troy ounces did you say?
I think it's 1,000, isn't it?
Or it's 100.
Okay, 100 trillion.
I just wanted to clarify that. So
that's fine. So $134,000, right? But you don't need $134,000 to trade a gold contract. Okay, you only need like 5,000. The word contract is just a word. At the Board of Trade, they always use cars instead of contract. So I'll do 10 cars of corn or 10 cars of bonds. The word cars was interchangeable with contracts. Some people thought cars was short for contracts, but it wasn't. It used to mean rail cars full of corn or rail cars full of soybeans. But what it actually was, it represented a unit. So when you trade 1 unit of crude oil, 1 contract of crude oil, 1 barrel of crude oil, it's all kind of the same, because there's actually in 99% of the cases, there's no physical exchange of commodity.
What had all that action in that scene is the fact that there's so much screaming and yelling and buying, selling, and that sort of activity. Has the computerization taken some of that drama out of the floor of the market? I mean, we're not seeing runners anymore having to punch cards.
Well, there's still options markets, so there's still runners down there. But yeah, I mean, what they showed in trading places for the most part is gone. Because, I don't know, Mike spent time in options pits. Mike, were options pits just as active as underlying pits when, like, for example, non-farm payrolls came out?
Oh, yeah.
Yeah, I mean, the underlying pits were
active. It was especially active if stuff got... The options pits were most active when stuff got locked limit also. Because...
Yeah, obviously.
Because the only thing
place
you could
trade
transact was in the option pits. So if things got locked limit, you weren't trading futures anymore because they had hit their maximum move. There's maximum moves in futures, either up or down. And when that's hit, until somebody's willing to do a transaction less than the locked limit price, it stays locked. You don't do any more transactions. But the option pits aren't held to that. So you're essentially then synthetically trading the futures through combinations of options. So the options pits would just go absolutely nuts.
The explanation of locked limits for people, as Mike just explained, it's like the circuit breakers you see in the stock market. The exchanges have a certain number of points or ticks or decimals that things can move before they shut trading down. And for most commodities, they have in both directions. So if a market falls X amount of points, it's not allowed to trade anymore unless that trade is higher. And the same for the other way. If the market rises a certain amount of points, they're not allowed to trade anymore unless the next trade is a lower price, except that doesn't apply to the options.
Right. So if you wanted to go long a futures contract that was locked limit up and you couldn't, you could then go to the options pit and you could essentially buy a call and sell a put at the same price. And that would be a synthetic futures contract. It would mimic what the future would do, and that can keep trading higher than where the futures is, which gets to a very interesting situation when they get locked up. I rented Big Night.
How good is that?
I got it from the library. One of those things that I paid my tax dollars for. So they brought it in from another library, but I got it for free. So I actually, because of my tax dollars.
That's another movie. Like, it might be a better movie to me than it is to anyone else. Although, Mike, you're like empathetic enough to quirks that you'll see it. Like, honest to God, that movie, man. The older chef is my dad. Just remember that Primo is my father. They're the same person.
Gotcha. So I'm going to watch that this weekend.
Such a good movie.
Yep.
I'll be interested to see if that's just something where you have to be me to enjoy it.
Hope not.
I don't know.
It's you.
It's so good.
So, Hey, Bob, we're back at earlier this week's highs in the E-mini, S&P.
Yeah, here's what's going to be interesting, I think. I know we've wanted to talk a little bit about the Fed today. While the other central banks go in the direction of helicopter money, our Fed the U.S. Fed continues to get in a worse and worse, like a tighter and tighter, not locked trick bag. I mean, we had non-farm payrolls today, which we'll touch on, that were really good. But we still have poor corporate profits. I think you'd agree with that, wouldn't you, Mike?
Yep.
Corporate profits are not great.
They're not great.
other economic indicators. Generally, labor lags. You get the other economic indicators booming, and then labor picks up. Right now, we've got labor picking up. It's the weirdest recovery ever. First of all, it's taking forever. People are still calling this the recovery. I mean, it's 8 years old. Yeah, and we're 8 years old now, and it's like the recovery. And it's like it's like an 8-year-old breastfeeding still.
Well, I was
going to talk. Weird.
It's like an 8-year-old, and they're still talking about when he learned to walk at 1 or something, whatever.
Yeah, it's like
remember when he just learned, like it just happened yesterday. The recovery.
It is funny because like it is very similar to a child. Like when you hear a parent call someone the baby and they're 12.
Didn't they just walk down to the Fed printing presses and put them on overload and say, this is now the recovery?
Yeah, I mean, I've had that argument with people. They didn't actually print money, which I've had that argument with people. I just think with things like this, if we're going to be specific in finance, we should be specific about everything. They didn't actually print money. They just absorbed assets that would have needed money to buy. So in theory, there was other money out there. If you look at the money supply, it didn't actually grow that much, at least not in the beginning stages of what the Fed was doing. So people talk about the Fed printing money. They didn't actually print it. So it was essentially electronically done.
They digitized stuff.
They digitized it. It's like, they digitized it.
Because they put it on their balance sheets, and they did that through digital transactions. But it's not like they called up, like, hey, can you print us up some money, and then we're going to distribute it.
Right. There was an economist that once said that the U.S. can never default because theoretically they can just print a $1 trillion bill and pay off any debts they have, which is just it's just insane in terms of the cascading effect that would have.
Yeah, they could do it,
assets.
But there's a consequence to doing that.
Yeah, here's the better way of saying that the U.S. can never really default. I don't know if they would ever do this. The U.S. has somewhere in some estimates I've seen, somewhere in the range of $200 trillion in real estate that they own in national parks and things like that. Can you imagine selling a housing development somewhere in Yellowstone with a view of Old Faithful? What that land would go for? I mean, that's really
Old Faithful erupts.
Unless it erupts too much. That is supposed to be something. Anyway, we're about to get down a rabbit
under there. So I don't know if I'd be buying a.
Is this the difference between fiat currency and when money was on the gold standard?
Yes. You can't print money on gold that's backed by gold because you can only have as much money as matches the gold.
I thought
in theory,
currencies came from Italy.
We're going to pick on Italy again. God, does Italy deserve it, though?
Yes, but we'll get to that with the banks.
It's kind of weird, though, that like they're
car joke, by the way.
Yeah. Oh, I know. I think most people know fiat's an Italian car, but isn't it kind of funny that fiat means fake or like no substance in terms of currency, but it's Italy's biggest car brand? I mean, the word fiat doesn't technically translate into fake.
Well, the money used to say that this paper means you can go to the bank and get its worth in gold, but now it says, in God we trust. So the money's backed by God.
Yeah, I guess. It's funny because like I'm not a gold standard person, and it's too far gone. Right? It's just too far gone. If you were to go back to the gold standard right now, the amount of personal suffering that would go on would just be insane. And it's just not something. I'm not saying it would be the right or the wrong thing to do. I'm just saying there would be no political will to do it.
That was the mid-20s, right? Late 20s?
When we dropped off the gold standard?
No, the gold standard was Nixon in the 70s.
In the 70s. That was Bretton Woods.
Yeah.
In the early 70s. That's when we finally... Now, we revalued gold prior to that, back with the Depression, but then we finally went off the gold standard. Was it 71?
Bretton Woods?
Sometime around there.
Only 45 years ago. Wow.
Yeah. Wow. 45 years ago, we still had some semblance of sound money, and now we have what we have now.
God.
And here's, I brought up the E-minis because they're back at their high. So last week I talked about the S&P going, it broke out of this huge horizontal channel a little bit, and I had intermediate targets. And my first target was 2230. So we were down the first 2 trading days of this week, pulled back into the R zone. I had people contact me who listened to the podcast saying, you made a call at 2230. It's not there yet. What's going on? It went down 2 days. Okay, I said we broke out of like a 3-year horizontal channel. It's not. Okay, I just want to clarify for something. If we're looking at like a 3-year chart and some event happens based off a 3-year chart, it generally is not going to get there in a day or two. It's a longer term target. Just like if we look at a double bottom on a monthly chart, it's probably not going to get to its target in a few days. It might take a series of months. Well, this was a monthly breakout from a 3-year pattern. And just because the market's down for 2 days does not mean the pattern's invalid, does not mean anything's necessarily changed. Because now we're right back where we started the week, and we could break to new highs, and then we could fulfill this pattern still within the next few weeks, at least the initial term target. So unless the Fed does something crazy in September and raises rates.
I'm going to propose something now, Mike, that we do a position sizing podcast one day. Maybe not the whole podcast, but explaining to people. One of the issues I get when I'm talking to people, just like Mike just commented on, is people will say to me, what should I buy? What should I sell? So I might look at something and tell them, all right, I want to buy, I don't know. I'm not saying this, but maybe I say I want to buy American Airlines, or maybe I say I want to buy Netflix or something. Now, I'm not saying
Tesla.
Tesla. It doesn't matter. I'm not saying it. So it doesn't matter which stock I use here. Maybe I want to buy Apple. But I'll tell them, my target is like 110, or let's just use Apple next time. My target is 110. And they get in at what price right now? 107.25 is right now. Okay, 24. They get in at 107.24, and then it goes down to 106. And they go, I'm getting killed here. What's going on? What do you mean? Well, I bought 10,000 shares. Well, why the F did you do that? I mean, are you kidding? I said we're going to 134. Yeah, I figured I'd make $300,000 on that. The way Mike and I look at something, it either goes to target or it goes to the price where the trade is now not going to work, which is a stop price. For people who don't know what a stop loss is, it's the place where you exit a position at a loss and you want to stop the losses. So if I say the stop loss for my Apple trade is 100, then when it reaches 100, I will stop my losses at that point. I will get out of the trade. So the way Mike and I do it, it either goes to target or it goes to a stop, one or the other, and we don't care how long it takes.
I just want to clarify something. It could also be some of the things we do. We use trailing stops, which means let's say it's going in our direction, we're also trailing a stop, and if it were to reverse a certain amount or to hit some other key level, we might exit the trade there. And it doesn't necessarily have to be a loss. It could be a partial profit, but it's again triggering an exit to the position because something's now happened that the pattern has changed and is no longer valid. I'd like to even be on the calls like, all right, we just touched on stops and trailing stops, so those could even be 2-3-minute YouTube video segments explaining what a stop is and a trailing stop a little more in depth and a little more visually. That would be another tie-in.
Hey, what about that Solar City?
That's why I brought up Tesla before, Bob. Maybe do you want to buy some Tesla now that I think it was approved, wasn't it? Solar City, they approved the combination between Solar City and Tesla.
I guess what can they do about it, right? I mean, there's no conflict of interest. Well, I shouldn't say there's no conflict of interest. There's no.
Really, you really want to say that?
There's only conflict of interest.
There's no monopoly situation going on. There's none of that. There's no. God, I forget the term they use for that now. But there's nothing for regulators to do about it. There's no market conflict. They're not going to take over a huge portion of either market because of that. And I mean, I guess Tesla got hit, but not really.
Not really. Not really. Tesla's that Teflon stock right now. Well, let's see. Solar City announced that, quote, after comprehensive due diligence and consultation with independent financial and legal advisors, the independent members of the Tesla Solar City boards of directors approved this transaction. And they believe it's going to achieve cost synergies of $150 million in the first full year after closing. I would really find that fascinating if they could do that. I think this is just sort of a bailout of Solar City. But now Solar City has a 45-day go shop period. Do you want to explain what a go shop is?
I don't know what a go shop is.
You don't know what a go shop is? That means Solar City is allowed to solicit alternative proposals during that time. Like if somebody else really wanted Solar City and say, you know what, I can beat what Tesla's going to do for you. I can up the ante. Solar City could say, hey, great. Well, Tesla, we found a better deal. So we're going to go with that one. So, but that's not going to happen.
Tesla went all in.
Yeah, well, all right, there's so many tie-ins between Tesla and Solar City already, and I don't think anybody's really beaten down the doors to acquire a solar panel company that is not doing so hot. So, but then to tie that in with Tesla also, they did earnings this week. So their non-GAAP earnings per share, they lost $1.06. They were only expected to lose 52 cents. The revenues also missed at 1.56 billion versus 1.63 billion. But, you know, I think they slightly delivered a few hundred more cars than expected. So it's all good.
I'm looking at a headline. Tesla shares, I'm looking at a headline from the 4th. Tesla shares are up 1.7% on Thursday after the company recorded big Q2 earning and revenue misses.
Here's why. You want to know why they're up?
Right.
Because they're coming out with a small crossover vehicle based off the Model 3, and it's going to be called the Model Y. All right. Now think about this. They have the S. They have the 3, which is really an E. They have the Model X. Now they have a Model Y. They just spelled out sexy. It's no longer just sex. It's sexy. See? And they're also going to make a Tesla minibus based off the larger Model X. And Elon Musk has referred to the vehicle. It's not a what are those minivan things? It's because that would not be good for their image. It's a minibus or space bus.
So like in the vein of the Volkswagen minibus.
So we have a sexy. Well, now they've completed their sexy terminology, and they have a sexy space bus. So that's why I was saying we got to buy the stock. What other company has a sexy space bus?
I'm almost like I'm going
to let everybody know on the podcast we are being sarcastic here. We're not.
Thank you. Yeah. Crazy talk.
We have to talk about Tesla, but I'm completely bored by it. I don't know. It's just like I'm so, you can't if I can't make sense of a stock, I just want to let everybody else make money on it. And then Tesla just reminds me of the 90s .com stuff. That's all. Where I remember that, Mike. There were people making money on .com stocks, and I was sitting there in my stupid little trades, looking at this stuff, going, "How is this guy making money? This guy's a moron." But he's just tripled his money again, and it was all this .com stuff. He used to be doing his regular job, and he would trade these .com stocks all day. And the kid was making a fortune. Point where he then quit and went to be a mortgage broker. Oddly enough.
Well, no, that's very similar because we had the .com bubble, then which was made by all these people just trading brainless, sock puppet stocks, and then
that's why I made the reference. The mortgage bubble.
Next is the student loan crisis bubble.
Well, I wonder if Tesla salesman now. I don't know.
Maybe I'll just drive up to the street at the Tesla showroom up here really close to me and see.
There's one by me, too.
Well, with all this, you know what? I'm just going to shift gears here.
Shift away.
Shift away. Hey, that was a good... I didn't even mean that. Shift gears, and I was talking about Tesla.
No, the Tesla doesn't have gears.
I know, but it was... Come on, it was a car thing, and Tesla's a car thing. It's got a space bus.
I don't know what to say anymore.
Okay, Mike. Okay, we'll get into some more things with stocks again, but Goldman Sachs, they came out with they said, in their view, equities will remain fat and flat. That's a quote from Goldman Sachs. They're now downgrading equities to underweight in their 3-month asset allocation. So I guess they're going to underweight for the next 3 months. So that would put it through the election, right?
Yeah.
So why are they doing this? Until the growth situation improves, we are not that constructive on equities, particularly after this type of rally amid continuing concerns about the sustainability of stimulus-led growth in China, global policy uncertainty, and Europe in particular, and dovish central bank expectations, and heightened prospects of unknown stocks. So they're not very bullish, but the markets, it pulled back a little. It was going sideways. The Dow did pull back a little, but now it looks like it's attacking its highs. The NASDAQ barely pulled back. What's your opinion on what Goldman had to say?
It's interesting because I don't know how you pull back on stocks. I mean, they obviously announced that before today's non-farm number, obviously.
Right.
But I don't know how you pull back on stocks when things are starting to turn the way they are. I think Mike and I think we're in agreement that the economy is extremely fragile. I think this economy could crack like an egg with no problem at all. But I don't know. We might argue that like the turn of data, I don't know. I mean, if the Fed doesn't raise rates, stocks continue to go up. If the Fed raises rates in the face of numbers like we got this morning, the market continues to go up. So I just don't know why you would be out for the next 3 months because of the election.
I don't. Well,
I guess. I mean,
we'll have to see. But some people tend to somewhat agree with us. Well, like Lindsay Group's Peter Bookvar, he says Wall Street is the world's most expensive market, even as a disconnect widens between stock prices and economic earnings and the fundamentals. He says markets are very dangerous. A few years ago, he used the word, quote, beer goggles, that QE and low rates clouded investors' attitudes towards asset pricing as everything looked good. And since the UK vote, there's been this voracious search for yield. I think it's made investors forget the risks of capital loss only for the reward of yield that is pretty microscopic, which that I've seen that same thing with chasing, especially these dividend-paying stocks. And then people are like, I get a dividend, and it just keeps going up, so I get capital gains too. I cannot lose. But, this can keep going for quite a while. We've seen this repeatedly.
Look, stocks, I don't necessarily see a metric where you could call stocks expensive. Versus the rest of the world, yes. But versus the long-term average, I mean, PE, the long-term average is somewhere between 16 and 17. And depending on whose metrics, well, maybe, but what is it, 15? It's 14, not 11.
No, it's down between 14 and 15. And we're trading 17. We're not like in a bubble like a .com, like we're trading 23, 24.
No, we're by any number of price to book, price to forward earnings, 12-month trailing, whatever, we're around 17 in the S&P. And I've seen the long-term average between 15 and 16, even if it's 14. It's not 21 or 22 or 23. So call me expensive, I think it's a stretch. And when you add in yield, I see why people are going that way. What do? There's it's almost like it's a demand for a certain kind of medicine that could potentially kill you. Right? But what choice do you have? Right? What choice do you have?
Yep.
They can't just sit on cash waiting for the Fed to get bond rates back to 3%, 4%, 5%. It may be a decade before we see a 5% bond, other than corporates or possibly some riskier munis.
Well, Goldman just raised the September rate hike probability from 20 to 30% in December at 45%. Saying there's this overall 75% chance of at least one rate hike this year. That just scrolled by. So that even upped from my earlier the rate hikes based off the futures went from 18 to 26 for September, and December from 37 to 46. So that's roughly in line with what Goldman's. That's probably where they're getting their numbers from. Do you want to talk about non-farm payrolls? So that was the big news for today. Because this might tie in with their rate hike stuff.
Well, non-farm payrolls was a big beat and really offsets, I think, the 11,000 that we got in May. That obviously was a bigger miss than today was a beat, but 255,000 non-farm payrolls today. That represents the July number. Beat every one of the 89 economists' forecasts in the Bloomberg survey, there was nobody that was that high. I think the highest one was about 245. The lowest one was about 10,000. So it was a huge range of numbers. The 255 beat everyone. A couple of important points, revisions up to May and June. May went from 11,000 to 24,000, so up 13K. June went from 287 to 292, so up 4,000. Private sector jobs up 217,000. Professional services up 17,000. I'm sorry, 70,000. So professional services includes like financial services, things like that. We now have plus 400K in labor participation each of the last 2 months. It's a small percentage uptick, 62.9 versus 62.8 in terms of the labor force participation rate. But it is 2 months of an uptick. And the household survey was 420,000. So people ask a lot, well, what is that? What's the difference between the household survey and the payroll survey? It's different when a company reports a hiring versus when a household says they work. Those are actually two different things. And I'll go into some of the ins and outs of the payroll calculation in my why today. But construction spending also recovered. It was down 3,000 in May, down 18,000 in June, up 14,000 this month. And you have wages up 0.3%. So just a broad-based positive number across the board, really. Where's no matter how you slice it. 3-month moving average is 190,000 now. The 12-month moving average is 206.
Okay.
I think 12-month being more important. Most economists believe you need about 220,000 a month to grow the job market. So we're at 206 now. So it's going in the right direction. Still not there. And again, it's an 8-year-old recovery. We've got an 8-year-old breastfeeding child here. But it's cover for the Fed. If they want to raise rates, it's cover. If the numbers keep going this way. I mean, if we get 11,000 again next month, it's awful, but it's cover for the Fed, I think. The Fed's been looking at jobs, and GDP is starting to kind of ratchet up in terms of prediction. Are we going to get that 3%, Mike?
Well, the GDP now forecast model, that's the one from the Atlanta Fed, right? Yeah.
Yeah, Atlanta Fed.
They just came out earlier this week, and their projection right now for the third quarter of 2016 is 3.7%. If you look at the little graph, the blue chip consensus on the high to the low side, top 10, bottom, the top 10 come in at about 2.8. The bottom ones come in about 1.8, and Atlanta Fed's coming in at 3.7. So that's sort of a very interesting disconnect.
Yeah.
At New York Fed also has been releasing their model that they started releasing a couple months ago. That that's going to come out later today. So I don't know where that is yet, but they've actually were down in somewhere in the twos when they released it last week. So unless they do some major revision, they're still mostly in agreement with the more of the blue chip consensus being somewhere between 2 and 2.8, except for the Atlanta Fed at 3.7. So I'm going to be watching to see where that comes in. But at 3.7, if we did get something, and I wouldn't completely believe it, but that would give Barack Obama the one print in his entire presidency, which would be above or at or above 3%.
Again, we've mentioned this in several podcasts. Only modern president to not have a 3% print on GDP. And I always want to throw in the caveat that I think the president has very little to do with the economy. Very little. So.
Well, and all the other numbers are
not really a knock on him, but it's a talking point.
Just the other numbers are sort of hanging in there. ISM manufacturing was released this week, 52.6, slightly below expectations, but of 53, but it's still above the 50 mark. Personal income came in at 0.2. We were expecting 0.3, so that was a slight disappointment. But personal spending went up 0.4 versus expected 0.3. So their income's not going up as much, but they are spending more. ISM non-manufacturing, well, came in slightly worse, but that's been in the mid-50s for a while. So it came in at 55.5 versus 55.9 expected. So these numbers are holding in. They're not stellar, but they're not rapidly dropping. It's getting to that. The only thing that personally I could see would hold them back from a rate hike in September is the election. And, because if they do something, the market reacts very poorly to it, you're going into an election. Once that election's through, though, if these numbers continue into December, I don't know any reason why they'd have an excuse not to hike rates at this point.
Yeah, the election's interesting. This to me is the first election in a long time where I don't think what the Fed does matters. I don't think Hillary Clinton gets a bump or a fall if the Fed raises rates or leaves unchanged. Because, they haven't touched rates in so long. And the economy just has sort of been plodding along, just little baby steps up and then a step back and then a couple baby steps up. I just don't think the Fed hiking rates is going to be like, they hiked rates. We got Clinton out of there. It just doesn't seem to fit this time.
Well, there's that correlation with the performance of the market in predicting elections. That's 87% accurate in the last, 100 or so years. So,
yeah, but what I'd counter with that is the market doesn't always go down on a rate hike.
I'm not saying it will. It's just if they.
No, I know.
I know. If it reacts anywhere similar to when they hiked in December, when we started the year, I think they're a little skittish. So they might just say, we don't want to mess with anything going into the fall. But hey, it's just like didn't want to mess with anything going into Brexit.
Yeah, I'm hoping that
they hiked in September.
I'm hoping that they're not trying to, because look, a hike or a lack of a hike based on what might happen to the presidential election is not in their charter, right?
There's a lot of stuff that's not in their charter.
No, I agree.
It's not in their charter to prop up markets.
I know, but but they can sort of say that in order to promote maximum job creation, which is in their charter, right? Their mandate is now robust job growth and inflation. They have a dual mandate now. So you could theoretically say that, well, the risk of the Brexit could hurt U.S. jobs, and it is within our jurisdiction. But a presidential election would not be. So I would hope if they feel they can hike, they do. If they feel they should hike, they do.
You have a much more faith in them than I do.
And I don't have faith in them at all. Any more so than I will believe a 3% GDP print if it comes before Barack Obama's out of office. I will not be believing that.
Australia, they cut their rates this week to 1.5%. So that was interesting. Also, did you see people were not happy with Japan and their latest stimulus announcement?
Yeah, they wanted them to go harder again.
Yep, and they
wanted them to do more.
The yen sold off, which means it got stronger. It's now back down to 101.88 as we're talking now. Let's see. Pretty much Japan only said they're going to they're just going to keep buying ETFs, right?
Yeah, they own over 50% of the market right now.
So that was a big thing.
Should we be saying free markets work when the government of Japan owns 50% of it?
No, it's over. That's what they're going to keep doing. People wanted more stuff like either some kind of helicopter money or just them pumping more cash into it, but they're just going to keep buying. See, this is what I don't get. Their whole thing now their whole stimulus packages, we're just going to buy stocks.
Yeah, it's almost an equivalent of helicopter money, right? That and the proposed 50-year bond that Japan wants to do. They're proposing a 50-year bond, and both of those effectively are helicopter money, without calling it that.
Japan's population is shrinking, so that's a bad position for any country.
Yeah.
So
aging and shrinking.
Well, and population growth.
Yeah. Their population growth is negative, and their population is rapidly aging, obviously, as all populations that are shrinking do.
So on top of that, the Bank of England cut their rate 0.25%. and they're boosting their quantitative easing by 60 billion pounds to 435 billion pounds, which 10 billion will take the form of corporate bond purchases. So now they're going into the corporate bond market. They slashed their 2017 growth forecast to 0.8 versus 2.3. But that 2.3% was a projection prior to Brexit. That was in May. So now they're down post-Brexit to 0.8 for their growth forecast for all of 2017. And their 2018 growth forecast is only to 1.8 versus 2.3.
Did you see the comment from Chairman of Peugeot?
No.
Trevor Finn is the guy's name. He essentially is saying, I'll paraphrase because it's a long comment. He says the UK has a huge advantage in car trade now, that they're not going to be a part of the EU. Britain is too attractive of a market, especially at the high-value premium end, for any bad agreement to be in place for the car dealers. I said that the UK now has a huge advantage in car deals. It's interesting when a company looks like that. We talked last week about some of the venture capital money increasing in the UK. Now we've got some of the reverse conversation of what people thought was going to happen. Just some of it. I mean, it's very anecdotal and it's very small. But they're saying the UK has a huge advantage in trade deals now that they're on their own because of the amount of regulatory red tape in the EU. So that was coming from the head of Peugeot.
Interesting.
Yeah, some of the negative Brexit stuff is starting to fall. And you know what? That 0.8 number you just mentioned, that may be them, be wanting to jump over a low bar, as some of our companies do in stocks.
They're slashing guidance a lot.
Yeah.
So
they're slashing guidance, right.
So if they come in at 1%, they're like, yoo-hoo, we won.
Exactly. Yeah, they're definitely slashing guidance.
Although I forgot to mention this from earlier, Atlanta Fed President Dennis Lockhart, that he wouldn't rule out the interest rate hike in September because he's watching closely for signs of possible asset bubbles. So
interesting.
He might be seeing some asset bubbles, so he's taking one side of it. And then a pair of Federal Reserve officials on separate visits to Asia. I like how all these guys are traveling around. They're saying the markets are too complacent about the September rate hike, and that they should. The rate hike's very much on the table. Well, they were talking in Indonesia and everything else. I don't know if that influences anything. The market doesn't believe the Fed. It hasn't been listening for a while. Well,
I don't know.
I don't believe the Fed.
Nobody, because they just keep talking. They just keep talking. They've had one rate hike in all this time.
Go ahead.
No, what I was going to say is when they continue to talk like that, it just... I had a question a long time ago, like, what does the Fed credibility matter? I remember hearing all these people saying the Fed's going to lose credibility. The Fed's going to lose credibility. What does it matter? Well, I'm figuring out now why it matters, why people care about the Fed's credibility. Because if the Fed is credible, they can jawbone markets in a direction before they actually have to take action that might have concrete effects they don't want. And I think they've completely lost the power to talk a market in a direction or to scare people with their words or to move people with their words into taking the positions they'd like to see. I guess that's where the credibility matters, is now they actually have to take action if they want to affect some sort of change in the structure of markets. They're going to have to actually nobody believes them anymore. I'm so sick of hearing the phrase very much on the table from the Fed since last December.
Yeah, if it was very much on the table.
This is the worst meal I've ever seen.
Yeah, it's a little stale at this point. It's moldy. It's
the worst meal in history.
I found my new investing technique, though.
What's that?
I'm just going to follow the Swiss National Bank holdings.
Really?
Did you see their list of holdings?
I did not see their list of holdings, Mike.
Well, their top holdings: Apple. Mm-hmm. Then they have Exxon, Microsoft, J&J, Johnson & Johnson, AT&T, General Electric, Amazon, Facebook, Verizon, Procter & Gamble, Pfizer, Google/Alphabet, Coca-Cola, Chevron. So they actually have a list of a number of capital gains appreciating stocks that produce yield.
Mm-hmm.
For the most half. They are, and a lot of these stocks have done pretty well, but they just keep buying them. So I'm wondering if there's a tie-in with that.
That's interesting. That's the Swiss National Bank holdings.
Mm-hmm. And because remember their yield curve is like negative across the board.
Yeah.
They're in search of yield. I'm seeing this same theme play out repeatedly. And if you look at these decent yielding stocks that are doing, that are still somewhat trending or holding or moving up slightly, that's essentially their list of their major holdings. It's fascinating. What I forgot to actually mention, looking at some of these stocks, as I was going through the list and looking to see how all these were doing, because I wanted to mention a couple stocks to people. Actually, on last Friday, with the close of Apple, it triggered a double bottom play. We've talked about these a fair amount. And the target for this, it's been up this week. We triggered this at about 104.17. The target for this, the suitable target is 111.34. So we're now up to 107. My area is looking for possible overhead resistance again is at 111 to really 112 for this double bottom to play out that's triggered. So if you're holding some Apple, you still have a potential some upside for this to run. There's other prior resistance from their April highs around 112.30, which ties into this double bottom target. So you can watch for that. Another stock I've been watching because it's an interesting stock. I think it's a pretty decent stock is GE, which is on the Swiss National Bank holding list. And on a weekly basis, this pulled back to its dynamic R zone. So they also could be a decent buy. It had a high a couple weeks ago, 33. It's now pulled back to 31.40. So anybody looking at GE as a possible stock to get in, it's at a pretty decent spot for me. I was watching that. That's why I was going through this whole list. Anything that's caught your eye?
Yeah, I don't want to own Chevron, that's for sure, as I look at that list. I do not want to own Chevron. Exxon's a better holding because there was a double bottom in Exxon on
There's
the
a
monthly
double bottom
chart.
in Chevron.
Yeah, I'm talking about the monthly chart. What are you talking about?
On the weeklies from earlier, and it did trigger. Actually, Exxon sold off, I believe, more on a percentage basis than Chevron did with this last pullback in oil.
Yeah, but Exxon's got a really nice monthly double bottom, and it hadn't quite reached target yet, and it's come into the R zone, but they're both below the 200 monthly, which I don't like. So considering Exxon being their biggest holding, Chevron has to get back up above the 200, which is about $10 away. Exxon doesn't, although it's back below it.
Exxon has to get above 89, about 89.50 right now. It's trading 87.45.
Right. So if I had to pick one of the two right now, I'd pick Exxon, but I don't want either.
No,
I don't want either one of those. Yeah. I mean, I think oil's going lower. I think it has a chance to run toward the old lows, 26.10.
Well, you know what's fascinating to me on oil?
What's that?
This is still early. No, it's setting up for a massive head and shoulder top. It's now rallied. It bounced off a GAN cluster earlier this week. Rallied. What was the lows earlier this week? 39.19. It's rallied up back to 42.10. And I'm not saying this is as high as it can rally, but the moment it really turns over, it will have made the right shoulder on this massive head and shoulder top, which if that triggers, it puts us back retesting the 26 level.
What time frame?
Well, if that's on a daily, it would trigger on a daily or a weekly.
Okay.
So this is a move that could take. It's not going to. We're not again saying that oil. First of all, the pattern's not complete. Mm-hmm. So and this, if it triggered on a weekly or even daily time frame, this could take weeks to unfold. So I'm not saying it's going to we're not poised for an oil collapse of $20 overnight.
Yeah.
But it is interesting. I started to see that pattern unfold, and so far it's continuing to build that pattern very, very nicely.
Yeah, that's what caught my eye on those. I don't want to own either one of those right now. So I don't know that you want to follow them completely.
No, those were that's what I was going to. But besides this last oil sell-off, Exxon and Chevron had been, doing halfway decent for most of the year. So
GE's a company that's reinvented itself.
Yes, it has. They've really reinvented themselves.
Yeah, I mean, we see a lot of their TV commercials, right? Where there's the sort of geeky tech kid, and he's talking about how he works for GE. He's going to be writing language, and then he's having lunch with the people who started the cat app, where you put hats on cats and all that. But it's a really interesting stock. I mean, I think General Electric is, I think, a buy and hold, quite frankly. And they got a decent dividend as well, if I'm correct on that. And I think they just raised it.
Correct. That's one of the reasons I was bringing it up, because it's also for people looking to get in it. It could be a decent. It's pulled back a bit. It's pulled back to our technical levels, so it's a decent place. That's why I was bringing that up, and it's got a dividend, and they have reinvented themselves. So that's more of an investment than a trade to me. That's something. Yeah. When we talk about the difference between investing and trading, some things we've said have been like we talked about Chipotle a few weeks ago, that it would rally up and I'd buy it, and it did hit the horizontal channel targets. We called up and I said that was a trade, not an investment, because even Chipotle's back down. I looked earlier today, it was below 400 again after going all the way up to hitting our targets around 443, and now it's sold back down to 399.14. That's why I'm saying it's not an investment yet. It will be at some point, but it was a short-term trade that could be taken advantage of, but it's nothing that I would hold long term yet. When it filled its target, it was done, and I'm not looking to buy it until we have another short term pattern. Whereas GE, that's something I can add to my portfolio for a longer term.
GE is so important because they're aerospace. They are the foundation of our defense. They just released these super high efficient electric locomotives using all new technology. They're a fantastic American company
but they don't have the space bus.
Powers the world. They do not have a bus made of space.
So
that's a 23-cent dividend. It's about a 3.04 dividend yield right now.
Yep. Yeah,
so 3% yield.
Yep. And in this day and age, a 3% yield is pretty good.
Today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gann ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style. And one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com.
So, hey, what's your why, Bob?
So my why is the non-farm payrolls number. And I got a question this week from a client/friend of mine as to, he said to me, why do we all care about the non-farm payrolls number? Don't they just take the unemployment claims and subtract it from the labor force? And they don't. They don't do that at all. It's a completely different calculation. I thought it was important to talk about how non-farm payrolls are calculated. All right. Essentially what it is it's a survey. Okay. It's an old school survey. And it's a survey of about 100,000 people, 110,000 people, 60,000 homes. Well, that's larger than your average survey. When you look at an election poll, that's about 2,000 people usually, 2,000 to 3,000 people. This can reach as high as 110,000 people. All right. And it is a phone or in-person survey, and it rotates. They literally count 800 counties and cities, and they rotate them every 4 months. No one particular area is surveyed more than 4 months in a row. And it's interesting because you hear a lot of commentators say, well, the non-farm payrolls number doesn't calculate people that are self-employed. Well, they don't actually call. It kind of does. It depends. They don't actually call and say, do you have a job? They ask questions like one of the sample questions that they show is, have you done work and gotten paid for it anytime in the last week? So if I had, gone over to Stafford's house and looked at his portfolio and Stafford bought me lunch, I would say no. But if Stafford said, hey, can I give you like $100 to come and look at this thing, then I would theoretically answer yes, and I would count as employed. Employment takes precedent over things like schooling. So if somebody is a student and they work a part-time job, if they say to them, have you worked for pay in the last week? And the person says yes. Then they say, are you a student? And the person says yes. They count that person as employed. So they try to really up those numbers with the questions, I think. I don't think it's rigged because it's been essentially the same way since about 1940. The questions haven't changed that much. But they don't actually ask people, do you have a job? They say, have you done work for pay? And then they categorize things. And they make assumptions on the way that the questions are answered. So that brings about the questions of why are there these revisions? There was 17,000 jobs added for May and June in this morning's numbers. Like, how can they miss by that much? The surveys are often incomplete. So they want to get the entire number of people, the entire 110,000 people, 60,000 homes in the survey. But oftentimes when the number is due, they haven't gotten responses. Some of the in-person people didn't show up. Some of the people they're supposed to call weren't home. They need to call back. They're very strict about who they call and getting the data from those people. So the revisions can vary greatly depending on how incomplete the survey is. And that's why we don't know actually, we don't know how complete May is right now. They added 13,000 jobs. We don't know if they got to all 60,000 homes yet. We really don't. So there's a combination of timeliness and then accuracy that happens, and that's why there's revisions. So the number is probably the largest survey that's out there. So if you're the kind of person that believes in like polls, this is a more complete poll. But it isn't really a perfect representation of whether people are working or not. There's different reasons why people can be in and out of the labor force. But I just thought it was an interesting thing to talk about. The number itself it's a very wide-ranging survey, and it's about as close as we can get to real employment.
So I just wanted to have some breaking news before I get into my what. The Atlanta Fed just upped their GDP now forecast to 3.8%.
So now they're even further away from the consensus.
Hot off the wire. My what is, we've had a nice run up in silver off some lows at the end of May. We got up to just above the 21 mark. We retested those highs earlier this week with highs around 2083. We're now trading back down. We've developed a very nice weekly double top pattern. If this triggers with a close below, and it won't trigger this week, it doesn't look like, but I just want people who know who've taken advantage of some silver run up, it might be time to take something off the table, book some gains, especially if we do close below the 1927 mark. We could easily go back down to the highs in May around the 1792, 18 level, and the full completion area for this pattern is around the 1780 level. So I'm just alerting people that we do have a potential double top in silver. If they take advantage of it, might be time to book some gains because it could go lower, which would be another buying opportunity.
A quick compliment to Mike before I leave you clowns. When I had to do the Futures Institute trade, which is still up on futuresinstitute.com, we talked about picking the index that we wanted to do, the index that we wanted to do the trade in. Mike's idea was NASDAQ because he says it was the one that has broken out just like the other two, but had not yet made new record highs. NASDAQ has made new record highs. So good call, Mikey.
Well, thank you.
Gotta go, guys.
You know how I got so good at that?
How?
I just sit and stare at a carton of orange juice. You know why?
Why?
Because it says concentrate.
That's the worst joke I've ever heard. I have plans today to go into every bar in the city of Chicago and walk up to the bartender and say, pork bellies, and see what he pours me.
Okay, and when should I expect to have the bail money ready?
Within 3 hours, I'd say.
Because if you're not arrested at some point, I'd be shocked.
Pork bellies!